Good morning, everybody. Welcome to the Loan Officer Breakfast Club, April 8th, 2026, my friends. Aha, it's Flux Capacitor Wednesday, so we're going to get to that for sure. Of course, we have our special guests in the house today. We have the unbelievable Kimber White with us from them. And, of course, his cohort in crime, Ginger Bell, is with us as well.
Hey, by the way, wait a minute.
Wait a minute. Yeah.
So, what's a cohort? It
I
sounds
don't know.
like it sounds like something. It sounds like something I would go to the drugstore and get a lotion for or something.
A cohort. Yeah, there's an ointment for that.
I got a cohort. Yeah. It's like right here, and it's been.
Oh man, let us know, what does cohort mean in the chat? That's a good one.
Well, if there's a cohort, that means there has to be a hort, right?
Yeah, like so who's the hort?
So Kimber's the hort.
And I'm the
I want to be a hort.
I don't want to be a hort.
I don't think I want to be a hort.
But unfortunately,
I think that's something I was earlier in my life, and I
this day is out of control.
Yeah.
It has come off the rails already, and we're just getting started here at Breakfast Club. Well, cohort, hort, whatever you are, good morning to you. Okay, here it is. Here's a quick, clear explanation of cohort in case that's what you're asking about. What is cohort? Cohort is a group of people who share a common characteristic or experience with a defined period.
See, it sounds like something I'd get in Vegas and I wouldn't share,
That's
I wouldn't
right.
tell anybody about. Though,
Yeah,
so,
yeah. It indeed does. It indeed does. Yesterday we talked about those four little words, and it was Just Ask Tuesday yesterday. And before we get into Flux Capacitor Wednesday, when we let you guys know just how much capacitance is left in the year, in the chat, like if you deployed those four little words, right? I'd love an introduction. Let us know. Let us know if you deployed those four words. I'd be curious to see that. And while we're waiting for that, we will go ahead and get to, we all know what it is. It is Flux Capacitor Wednesday. So let's go ahead, Kristen. The Flux Capacitor's in the chat, my friends. And Justine, what is the capacitance of the year left for us to absolutely decimate and destroy our goals? What is it?
Yep. 73.2% left.
73? We're under 75, Carl.
Well, she's 73.1 because she's in South Africa.
Right. The lower hemisphere.
Right. So it's already tomorrow there or yesterday.
I got it.
Hold on, guys. I don't know. 78. Oh, no. Kristen got it. 73.2.
Wow.
73.2.
No, I think Catherine gets up at 5.
Oh, Sharon's just shooting the breeze with us down there.
She's
That's
closing
cool.
alone. She's locking alone already.
Yeah. It's like, yeah, good stuff. And before we get started, too, we do have to spotlight Chris Johnstone. Doesn't he look dashing this morning?
I think it's the same thing.
Doesn't he look fabulous, everybody? Come on, let's give him some cheers. Let's give him some rounds of applause.
Frank's going to dash away from the camera.
Anytime one of our fellas is wearing something other than a black T-shirt, we all go, "Oh my gosh,
It's
you look
notable.
so fancy today!"
Right? It's
Well,
notable.
all right. So truth be known, he washed his shirt with the Mrs. dress.
There you go.
Hence the aqua. The what color is that? Aqua.
I don't know.
It's almost Carolina. It's almost Carolina.
I don't know, but him and Nick are
they went to
they're
the same
sporting
laundromat.
the same vibe, man.
Yeah, they went to the
today.
same laundromat.
Yeah, sporting the same vibe. Yeah, there's a memo we didn't get.
Yeah,
you know what I mean?
It's
Or
guys aren't in the
wives
group.
didn't get. Yeah.
You saw it here first.
Good stuff. All right, so hey, come on, man. Nobody used I'd love an introduction yesterday. Is that what I'm hearing? I mean, why do we come here every day? Why? Jen Woodland. Why do we come here every day if we're not going to use the things we talk about? This makes no sense.
To gaze into your eyes.
All right, there we go. Kelly Grant used it.
Of course.
What'd you say? Well, Kelly. All right, Kelly, go.
Don't of course me, guys.
Yeah. No. I mean,
That
of
was
course
a
you did
compliment.
it.
That was
Of
a
course you did
compliment,
it. Yeah. Of course you did it. Yeah.
So really implementing, like focusing and implementing on these tools that we learn in the morning. I scarily, as I told you all, stepped out of my box and I have 11 active applications, 4 active people looking this week and wanting to close in like 30 days.
Good for you, Kelly.
and like 7 real good people because I've been picking up the phone and just calling these realtors and like just making the connections all over again. And people aren't mad to hear from us. They are happy to hear from us and they want to know all the solutions that we can do. So why are we so scared to help people? And I said, this is what I'm here to do. Like, I'm in my dream job. I love to talk and I love helping people. So what the heck? Why was I so scared to hit the button? And now I'm busy like crazy.
Why are we so scared to help people? I love that.
It makes no sense.
Why are we so scared to help people? Are you scared to help people?
I have to kick myself in the butt. So thank you guys, because I need this daily motivation every day. This is my cup of coffee.
Wonderful. Wonderful. So we got to give you victory fanfare just for that, because it was great. Thank you, Kelly.
And I heard it works. I heard a rumor that it works even in Miami.
Even in Miami. I've heard about that too. Recently, in fact.
It just might work in Miami.
It might work in Miami.
Actually, it just might work in Miami.
Do you have a story about that, Kimber?
Yeah, Kimber. Let's get to Mr. Kimber White. I'm going to bring him up with the music. Come on. Mr. Kimber White from the National Association of Mortgage Brokers, Warren Kendrick. We're going to talk about condo reform and how to make some money with it. So what's going on, Kimber? How are you, man? What's shaking these days, brother?
Not much. I'm down in Miami from Fort Lauderdale. Decided to spread the positive words about condos and the condo reform. Before we get into that, though, everyone's doom and gloom about condo reform. Yeah, there's some real issues that's coming that NAM's going to be working on, but it's positive, and I think you really put that out there. I decided to come to Miami and meet with some of my realtors that I did, and actually have training classes on the condo reform.
Interesting.
So I've spent the past 2 days in a hotel room in Miami, going out to offices and spending time on condo reform. We've picked up 4 loans, 2 days, 2 new realtors, and now I said, can I refer you to another realtor that I had dinner with last night? That's positive.
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
You know, Kimber, it just never ceased to amaze me of the best thing that helps our business is simply to be having conversations.
It is.
Like, literally just having conversations. And it's amazing when that happens. Good for you, my man.
We have solutions. We don't have problems.
Yeah.
Love it. Love it. What is the condo stuff that's going on? I'm oblivious to it.
Okay.
So, what happened?
That's because you don't live in Miami.
Well,
Yeah.
Miami, Texas, California, parts of New York. There's lots of areas throughout the United States. Florida used to be really the state that had the strictest condo rules. That was kind of like, so no one else really cared. We had to have 10% reserves in our budget. You know, for those who don't understand that, it is long story. If you had $1 million in your condo HOA dues that come out every year, then you had to have 10%. You had to have $100,000. That was just a rule. That was the state of it was pay to play, basically, and it was because of the Surfside collapse that happened here. And you had to have the structural inspections, which was all over the United States, but it was more here. And most people didn't have it, so you had to put 25% down or first and second. Well, folks, y'all have caught up with us. It's nationwide now, so it's
really
it's just not going to be Florida. That's going to be across the board. That's like, hey, we're going to make everyone uniform. So that's one of the issues. But the real thing is also insurance. There's many states, including Florida, that they can't afford insurance. And I think that's something we have to talk positively about. You had to have full replacement cost value on the roofs, which, you know, would be in the full replacement cost value is what's it cost to build new whenever you replace that roof. You know, it's just like you have replacement cost value on your contents in your house. You had to have that. Or it would do. Many condo associations were doing actual cash value because the difference between replacement cost value and actual cash value on a roof insurance could be $50, $60, $70, $80,000 on a small complex. So people were saying, we're doing just actual cash value. We're going to save money. So what ended up happening? It didn't qualify. Well, rule number 1, now the Fannie Mae and Freddie Mac both will accept actual cash value on the roofs. That's huge. Then the other one that was positive that came up was now there had the minimum per unit is $50,000 of coverage on that unit in that building. It used to be, oh, if there was a $200 million policy, they had some formula, had to figure it out. Most of the time, you weren't going to meet the need for that condo, for the value on that condo. So to make it simple, Fannie and Freddie for once said, guess what? It's going to be 50,000. And honestly, most condo associations are doing 50,000. They were when they dropped them. Again, why do they drop them? That was saving thousands and thousands of dollars and thousands of dollars in assessments just by being able to do that. So that's number two. Number three that we've found that we've got away from is on brand new condos. Brand new condos. Basically, none of us mortgage brokers could do new condos because they had to be full of the full process. They had to go through Fannie Mae. They had to go through the entire pre-approval. So, most people, banks were lending on what it was. Now, if it's 50% sold out, they're treated just like a regular condo under full review, which is huge. Now you can go out there and start selling new condo projects that are 50% sold out, and that opens a market for everyone. This includes conversions for a lot of states that are starting to convert. We're converting into condos. Next, 50% investor concentration. For second homes and investments, it used to be if there's more than 50% investor concentration, you weren't getting a mortgage. That's gone. That's a positive. That's out of there. That's gone. Now there is no investor concentration rule. Now, we can go, is it going to be good or bad? We understood why it got there, but for right now, it's good. We have good. But we know why it started many years ago to have investor concentration, but it's good. So those are some of the major clean changes that's happening right now. Now we'll go into some of the not so good changes that
so Kimber, are those things in effect now, right now? Okay.
Yes. Yes. And lenders, even though it says a couple of them are July 1st, every lender I'm doing with are saying they're taking it now because Fannie Mae says you can implement everything now.
Okay.
Because most people are going to be delivering by
later.
So they're taking everything now. And on the downside, I had to talk to a couple of lenders who want to start implementing the full review and the 50% reserves, the 15% reserves right away too, but they're not doing that. Now on the other side, the limited review, which for those who don't know what a limited review is, limited condo review would mean if there was structural issues, if the 40-year or 50-year study, which shows that there's structural issues or deficiencies in the condo were there, then you could get away with a limited review with 25% down, 30% down for a second home or investment. So that was a workaround. If it didn't have the 10% reserves, you could get around a workaround with those. August 3rd, done, gone. Those now it's a full condo review. Full review, which is going to have the structural portion of the condo questionnaire. And you're still going to have, if you have a full review, you're still going to have the 10% in reserves. So there's going to have to be workarounds and a way to work that out. There are still products. When I finish, we'll tell you about that. January 1. This is the big one that we're coming about, and I think we're really concerned about. We're going from 10% to 15% reserves required. That's too fast. That's too quick. We just don't see how can a condo association pivot and get there. When I see the average condos, and by the way, 60% of my business since I've moved to Florida 20 years ago is condos. So, I've really gotten no condos as far as digging into it. Most of them have, at the best, 10, 11%. But the fact is they got to go to 15, which means more assessments, harder to sell. I don't see that happening in January.
Is that something that would ramp up over a little bit of time, or is that like, hey, starting next week?
No, Carl, that's the problem. Right now, there's no ramp up over time. Okay. It's January 2027, you got to have 15%.
Okay, wow.
So that's a problem. I mean, we know that that's going to be an issue. So that's something Nam's going to do. And of course, Ginger's going to talk about that, what we're doing in a few minutes. I hope Ginger's going to tell us about it. But I think that 15% is going to be an issue with us taking care
So
of that.
that's the kind of thing. The only way they could really get that going on is to like bump dues, right? Like right away, and
Bump dues, special
by a
assessments.
significant amount, right? Like by 15, 20%, maybe something like that to get there in time.
Yeah, special assessments. Special assessment bumping dues, but special assessment's probably the only way to get there to meet it right away. That's where that, and there again, this came out like just through a Fannie Mae memo about the implementation. I saw it on a Thursday, and it literally came out Thursday, and NAM jumped on it right away and said, hey, hold on. Yeah, great ideas, great things over here, but we have some challenges that we have to meet, and we've got to work through them, and we've got to educate. And then I think those are two of the negatives that's happening, but they're not negatives. You still should be selling and working out how to make it. We still have non-QM products that we can work. You can still put 10% down, rates a little higher. You still can get the buyer in there when that happens. But right now, you can still continue selling your condos and putting them through and doing them. But as you start educating now as to what condos have these reserves, which condos have issues, start doing your education and be the person to go to for those condos, and be the knowledgeable person and go out there and start educating people and taking care of them. Because reserve studies is an option for not having the 15%. But reserve studies used to have that they could go to a baseline of 0, which means that basically they could look and say, you know, we can go all the way down to 0 and they don't need those reserves. The baseline 0 has got there. Now it has to have a minimum median there. So there's no such thing as, hi, the reserve study says I'm going to have 0 reserves and I'm fine. I actually had an attorney that was retired and did mortgages from Harvard, and he's telling me last week, goes, oh, we can do the reserve. I'm like, no, you can't. Here, you can't go back to baseline 0 anymore. And what baseline 0 is, basically, it would zero out your reserves. You're not allowed to do that under the new rule. You can do median, which is like half, but it has to be through a full reserve study and has to be within the past 3 years. So that's where we're at there. It's not all bad.
No. Yeah. I mean, at the end of the day, all of this is just incredibly good information, like you said, to just get out there and let people know you're the expert at it. And here's what's changing. There's probably a lot of misunderstanding right now as to what's going on and what the real rules are and that kind of stuff. So doing like you did, jumping out there, making presentations with real estate companies on this would be a very wise thing to do right now. I see, Ginger, you put in the information that's available at NAM on that link. Does that pretty much cover what we need to know as far as if we wanted to do a presentation or get the word out? There's enough information here for us to deploy something like that?
Yeah, we put together, a couple of things. So NAM put together a landing page, has the information that Kimber's talking about, because, it's hard to obviously get an idea as far as all the changes. So it has the Fannie Mae, it has the letter for the Fannie Mae, which is the 2026-03. And then it also has NAM's view position paper. And so what Kimber was talking about, and this is one of those things, NAM does such a great job as far as lobbying, getting out there and fighting for, originators to be able to bring information on changes like this that have an impact on borrowers that maybe somebody, at the agency or, whatever's being passed is not aware of. And so that position paper is there, as well as the letter. And then we created some marketing graphics. And so I uploaded one of them. And so it has a lot of different talking points on there. We have additional social media graphics that are available. If you go to the link that I put up there, if you go to nam.org, click on advocacy, then you'll see that. You had Kimber and I on a couple weeks ago. We talked about the trigger lead band, and that was in place beginning of March. We did the same thing, Frank. We created a lot of social media graphics. So go get those, get informed, and then go out and talk to your realtors. This is a great opportunity. Even if you don't do a lot of condos, it doesn't matter. It's getting in front of realtors. It's giving them the information, and it's being seen as the expert, just like Kimber's done. He went from, to Miami. I don't know how long of a drive is that for you?
It's about an hour and 20 minutes and
Okay.
Coconut Grove and everything. So it's not that far, but still.
It's not that far, but he went to an area that has a lot of condos. And so, realtors probably aren't aware of this. And now you're going out and you're talking about it. You don't have to have a presentation, download some of the graphics that we have made for you, take them in there and say, hey, were you aware of the changes that are going on? Well, this just happened. By the way, I'm also a member of the National Association of Mortgage Brokers, and we are fighting for this. And so, me as a professional, I'm fighting not only for what I do, but for what you do as well, because we all
Right.
work together.
Yep.
Yeah.
And so those are the things that's so important. So, get the information, be involved in the association. And, Kimber, one of our greatest volunteers, we have NAM's board is completely volunteer. And so it is all people who take time out of their lives, out of their business to go and advocate. In fact, we have our advocacy days coming up in a couple weeks in DC. I know, Kimber, you're going to be on the Hill. I think you have a couple of meetings set up, even maybe next week ahead of it, right?
I have, next week we have, like I said, Wednesday morning to discuss this. I have a meeting with FHFA to discuss this, and with several people on the Hill to talk about this issue, because what it does, it hurts affordability, but it gives us an opportunity. So we're up there talking about, hey, if you're going to do this, we want to know why, because we still don't know why they did it, which it's government. Why did they do it? But we want to know why. Tell us why, give us an understanding with it. And then let's talk about, hey, you're rushing into this and you're not giving enough time. Let's slow this down at the very least. Let's slow implementation down. Let's treat it like typical government work, slow it down. And let's just slow this down some. And so we're in the conversations. And that's the greatest thing about being a part of NAM and being what we do. We not just are, we're also, everyone on our board is volunteers, but we're also originators. And that's very important. We know our industry. We're not someone who's a talking head. We're actually in there. We see it every day. We're just, everyone that's on this call, we're part of that. So we really have a stake in the game. So that really means a lot. And that's why we go up there and advocate, because of our passion for what we do. We need everyone to help.
Which, by the way, is an advocate for whether you're a banker or a broker. It's an advocate for the industry.
Right.
I love what you guys do. Hey, I got a quick question. When you did these presentations at Realtors offices, Kimber, like how long was it? Was it 5 minutes or an hour? Or how long were these?
What I did, my presentations that I did, Carl, I went in and I just took the changes and I made my own little template, which was what I used off of NAM. And then I made a template and said, here's some positive. Did you know about the changes? And it was about 10 minutes. Maybe 15 at the most. And then I took questions. And then I said, are there any condos you're working on? Are there any buyers that you know that are looking at condos right now?
Simple answer.
Because we need to make sure we're moving them in the direction. Are there any buyers that fell out of the market that were waiting and say, I'm going to wait till the rates go down? Well, this is more important than rates, is what I tell them if they're looking at a condo.
I tell Chris, what I would do is I'd go to the website. It's a free resource. I'd snag some of that information. I would literally, I'd download it or do a screenshots of it. I would upload it into ChatGPT and I'd say, make me a 15-minute presentation that I'm going to present to real estate agents. And oh, by the way, I don't know anything about this. Make me look good.
Yeah.
Right.
Yeah.
So that's exactly what I would do.
And that's actually, and you don't have to. That's right. You don't. And the other thing I got out of that already when I got in there, well, most of these condo projects aren't there. So I've had a client, and I'm actually looking at one right in front of me now, the paperwork that the realtor I had dinner with and called me last night. She goes, because they said they can't do it because it doesn't meet all these guidelines. And I'm like, well, what about a non-QM mortgage? Oh, they don't. The person said they don't do those. And I'm like, well, let's fix. So those of you that have not known a non-QM or what it works in condo, learn it. Because a lot of your business that you now can pivot to for this, it is a possibility. The other thing I'll tell everyone, if you've got condo projects that you're working on, you want to work with your good underwriter, make sure you have a good lender that knows condos, and start getting them PERS approved. Get them approved with Fannie and Freddie now because they're good for a year. So if between now and May, as many as you can get approved and help your done. But the biggest thing is sell out there. This is a selling tool. It's an opportunity. It's opportunity to help your realtors and get business, because there is opportunities. When we see something like this as a challenge, we all want to go stick our head in the sand and go in the hole. Let's look at how we can turn that into a positive for us. And to me, this is how, like, I was the first one to kick and scream and kick the tires and yelled and said, what the heck are we doing? Ginger, Valerie, let's get going on this. But then I calmed down and said, now how can I make it a positive? And what can I do?
Yeah, I love your ask at the end there. That's such a brilliant.
So good.
It's brilliance in the simplicity of it. So, hey, Ginger, I know you're the growth officer over there at NAM. Is there anything that we can do to help you guys out?
Well, I think, and we have a question. David Bolton's asking, how do I get involved with NAM? And so, great question. And so, you can go to our website, nam.org. And we appreciate you giving us the opportunity to come and to share this information. And so, we have a special code for those at the Loan Officer Breakfast Club. And so, membership dues for NAM, it's $150 a year. But if you use the code LOBC, then that takes that down to $99. It's $99 a year. So get involved, be with the association. We also have a lot of states that are affiliated with NAM, and we're seeing that grow. You know, Frank, Carl, I mean, you and I have been road warriors for a long time, and a lot of the presentations that we've done are through state associations. You know, California, Frank, I mean, I can't even tell you how many times you and I have been on the road in California.
Sure.
Florida, you know, Carl, I think that's where you got a lot of your start, is through the Florida Association. So get involved with your local association as well. And if you don't have a state association and you want to start one, let us know, because that's where it starts. And it really does make a difference, because when you can go, and especially talking to your realtor partners and say, hey, I'm a member, I'm involved, I'm a volunteer, you know, whatever it is, however you want to show up, that makes a difference, because now you're not just an originator, you're an originator who is a volunteer, who's involved with your profession. So if you're not a member of NAM, become a member of NAM. It's very simple. And if there's anything that you want to get involved with, let us know. We have education committees, we have finance committees, membership committees. I mean, there's just lots of ways to get involved. So if you want to know about that, that's another great thing to do as well.
Hey, I'm going to sweeten the pot here a little bit. So anybody that joins, if you'll take I don't know how to, just take a picture that you did it, and text it over to the support group, and we'll credit $100 like to our next event, or if you buy something or you get one of our programs, or
that's amazing.
You do one of our memberships or something like that,
you.
we'll credit you the full $100. So it's like the biggest no-brainer ever. So if you're a current member, I'll credit your account. Like, we'll figure it out. And I'm going to hand that task over to Kristen, and I know she's just amazing, and she'll make it happen flawlessly. So
yeah. Also, speaking of that, you could take advantage of it, because Kristen, we've got the event coming up, right? The mastermind retreat coming up.
We do.
And we have an early bird special, that kind of a thing. So maybe that could apply to that as well. So when is that happening?
October 20th and 21st down in Clearwater, Florida at the Hilton, right on the beach. Beautiful setting, same place as last time. And right now we have early bird pricing out.
So what a great day to be on Breakfast Club, man. I tell you, and you know, Carl, I tell you what, the last I checked, that commissions earned off condos spend just as good as commissions earned off single family residences.
I've heard it's even better, because then when that homeowner invites you over to see their new home, you got that balcony that's always killer.
It's always wonderful, right?
It comes equipped with a margarita. You know, so it's
Hey, if you're liking Loan Officer Breakfast Club, you really need to check out Mortgage Marketing Animals. Don't forget, we have live events pretty regularly throughout the year. You can learn more by going to mastermindretreats.com. Mastermindretreats.com. Go there, check it out. Hope to see you at one. Hey, we do have an iPhone with their hand up. Been very patient. Not sure what your name is, but who is it and what do you got?
It's Marcio. I don't know why I keep saying that. Good morning, Frank.
Good morning.
Kimber, I'm also here in Miami Beach. And every time I talk to anybody that has the year of the regulators for condo, one of the things I bring up is that there is a handful of HOA, management companies, and one of the biggest ones in South Florida that refuses to answer the condo questionnaire section about the structural and safety of the project, right, of the building. And that drives me crazy because the buyer is paying for that service to get those answers, and without those answers, it's very hard for us to do our job and get those loans closed. So if you guys from NAM talk to anybody, just pass that along. There should be a way for us to make that mandatory, right? Because they charge 300, 400, 500 bucks for a condo questionnaire. So they shouldn't be allowed to not answer that particular section of the questionnaire. So it's more of like a statement and a plea for anyone that's listening to pass that on up the chain.
And I'll tell you, that's good because it happens to all of us. But also, I've been told, take it to your state regulators. There is a Florida Association of Mortgage Professionals here. There's the League of Mortgage Professionals that NAM is affiliated with NAM up in Jacksonville. And definitely we need to do that. It is absolutely ridiculous, and we need to bring that up. But I'll absolutely make sure that when we go next week, how can we resolve? Is there something that FHFA can do to help with that? You're right, it's a problem. But
yeah, we're not asking for a favor. We're paying for the service, right? We're paying for the questionnaire. So
let me give you a good real pointer, if I may, on that real quick. Once you get around that big, large company, which I know who it is, show up on their doorstep, and I'm not joking. Show up on their doorstep, show up on the association's doorstep. There's someone, whether it's the president, whether it's someone on that board, whether it's 9 out of 10 times I'm finding out, or whether it's the manager there, that absolutely will fill that out, especially if you go to that owner and you say, guess what? You're not selling your property. And this is the way it is. They will find someone, trust me, to fill that portion out 9 out of 10 times. It's just a little more pain in the butt, but it's a due diligence. Don't be persistent. Don't go to the big company because they're just paper pushers.
Yes, I agree. And I have done that. And it's I guess a geographic advantage because I'm here and I can drive the 10 miles if needed.
I've driven an hour and a half.
I've done too. But it's unfair to the other originators, right? It's unfair for somebody that's not here. So I prefer to have a level playing field and to make my life easier too. So I don't have to do that, right? Like I paid 300 bucks for the questionnaire. I want the answers, whether they're good or bad.
Right.
Just tell me how does the condo stand today? Is the building going to fall or not?
Hey, well, Marshall, all you got to do is just send that question over to here. I'll do it for half that price, and I'll fit that. Hey, Ginger, what was that coupon code for everybody here? I'm getting ready to post it.
They're saying it's not working in the chat, so maybe you guys can take a peek at that. They're saying they're trying to do it.
And if it's not work, like whatever you pay, I'll give you full credit for it. So whatever, if it's 150 or 200, whatever the normal price is, if the thing's not working, totally cool. Kristen will make it right. So awesome, Kristen. Thank you so much. She's so generous,
She really is. She's
just
such
real quick,
team player.
Hey, I just want Kimber, Ginger, you both been dear friends for a long time. And I said it here yesterday. You guys weren't here. I'm convinced if it wasn't for our national associations and our state associations and our local associations, of which one of them, I'm getting ready to go to Orlando as soon as we leave here, going to one of the associating meetings. Right. If it wasn't for you guys and the people that do what you guys do, I'm 1,000% convinced that back in the crash of 08, 09, that we'd all be working for one of the two big banks, that we would literally have been eliminated if not for you guys. And the two big banks are awesome people. We appreciate them. I bank at one of them, but I like having the option to work somewhere other than there if I wanted to, right? So if I wanted to. So I appreciate you guys for frankly, throwing a lifeline to our career. And well done. Good stuff. Thanks for all the fights you do.
Great stuff. Hey, before we rattle on here or move on, I should say we do have Craig. Hang tight real quick, but I will tell you guys. So Kimber is mentioning, the non-QM stuff for condos, that kind of a thing. I'm trying to have a gal named Katrina Haggerty on with AD Mortgage next Wednesday. And they do have a program specialized for the non-warrantable condos so that, this could be an arrow in the quiver, you know what I mean, to when you do these presentations, if you do come across those projects where you just have to go that direction. She's got some good stuff. Joanne Johansson referred me to her, says she's outstanding. The company does a great job in that regard. So I'm trying to have her on next Wednesday. So we'll see if we can get that arranged. I'll let you guys know. Also, Craig Barton, you had your hand up. Did you have anything before we get out of here? Craig, or did you have to go? Oh, he's waving his hand. He's muted. He's a friend of mine. He's a dude, so I can sad trombone him, even though he fixed it. Craig, I had to do it. Go ahead. What do you got, buddy?
I don't want to get in the weeds of the condos, but really condos are a business. In California, for instance, the regulators don't really monitor them. So there probably has to be some more state regulations where the government gets in and actually mandates the condos kick up or spit up their financials and their reserve studies. So I think it's a bigger problem than we really realize.
Yeah.
And thank you guys. And I'm going to try to make it in October.
Awesome. Good stuff. All right. We will get an email out today, as always, guys. We will put the code in there for you guys in a link, and hopefully Ginger and crew has that little snafu worked out by then. So you should be good to go. Don't forget, take a snapshot, get it to Carl or Kristen, I should say, and then you can.
I was just kidding about
get credit.
Just get a hold of anybody over there, and we'll
the best way to do it would be just email support@themarketinganimals.com.
Email support@themarketinganimals.com, and we'll
take care of you.
Handle it.
Yeah.
All right. Good stuff.
Well, I'm going to Orlando, Frank. If anybody's in the Orlando area, check us out. Where is it? I'm going Central FAMP, Florida Association of Mortgage Professionals, FAMP over in Orlando today. So if you just Google Central FAMP, our event will come up. So heading over there here in just a little bit. So good to see you, Kimber, Ginger.
Hey, come
back,
thank you guys.
Come back again soon.
Well, thank you so much.
Definitely. Yeah. All right, everybody. Good stuff, man. Let's go ahead and get on out of here. You guys have a fantastic day. I'll be here tomorrow with Owen Lee. Have a great one. Thank you, Kimber. Thank you, Ginger. Really appreciate you guys.
Thanks.
Have a good one. Catch up with you guys later. Bye. Adios.